I'm going to talk a little bit about the group that's coming up here. You all know Sally Rainey. She's going to be moderating this session. And so we've got two individuals from the Divest Invest group. So first off, I want to thank Divest Invest for being an Earth Ally sponsor of AREDAY. So they're doing a lot to help AREDAY in general. And secondly, I want to thank them for all the work that they're doing in the world of divesting and investing. So we all remember apartheid and the divest movement. Not all of us, but I do at least. If you're were born before a certain age. The divest movement today, if you ask one of my teenage sons, they'll talk to you about divesting from coal, divesting from fossil fuel investments. And it's a campus-wide, well, hopefully not campus-wide, but nationwide phenomenon, moving from fossil fuel and into clean energy investments. So our two guests from Divest Invest are, one of them is, let's see, Clara Vontrich. Vontrich or Vontrick? Vontrich. And she's with the philanthropy side of Divest Invest. And then Vanessa Green is with the individual side of Divest Invest. So I'll let Sally take it away and have a great armchair conversation.
Thank you.
Okay, thank you. Thank you. Well, this is one of my favorite subjects. I love this because the Divest Invest movement is really taking us into systemic change, which has been floated around here. We really need some deep systemic change. This is one of the social movements that's going to do that. The VEN also, I think, is another one that's going into systemic change. But the Divest Invest movement, and I'm going to let these ladies explain, how it got started and why it got started, but it really is a call to institutions, to individuals, to pension funds, to really look at their fossil fuel investments, particularly endowments for foundations. That's one of the places where this movement started. Because here these foundations were providing grants for environmental work, and at the same time, they were investing in what was creating what they were giving their grants for to stop or change. Mm-hmm. So Ellen Dorsey, which these women have worked with whom I also know with the Wallace Global Fund, was one of the original perpetrators of this movement. So why don't you go ahead?
Sure. I think Ellen would really enjoy that characterization as perpetrator. She's an activist of the highest caliber who got her start with the apartheid era movement back in the 70s and 80s. And she is also the executive director of the Wallace Global Fund, which is a premier Washington, D.C. foundation working on human rights, environment, and women's rights. She, in 2010, like much of the rest of the philanthropic community, was looking around in a state of shock because two of the biggest programs that philanthropy had thrown its weight behind, namely Copenhagen and a successful climate treaty or climate bill in the US, Waxman-Markey, had both failed. They had both gone up in flames. They didn't deliver the promise that so many organizations in the climate field had hoped they would achieve. And so here was a fractured climate movement which really had to do some soul searching. They had put so much money into these two initiatives and they had precious little to show for it. So at the same time, there was a really compelling analysis by a woman named Theda Skocpol of Harvard University who wanted to sort of break down the reasons why the climate movement had been foundering for so long. And what she concluded was that these big philanthropies were pouring their monies into top-down solutions. Top-down solutions, backroom dealings with politicians, policy prescriptions, meeting with the politician du jour, trying to twist his arm, and they left the most important card on the table, and that card was the people, the grassroots, the people power. And so Ellen, taking her experience in the apartheid movement and then coupled with this new analysis by Theda Skocpol, really realized that it was time to support and raise up the power of the grassroots to lead on this challenge. And so she got together with a couple of other visionary thinkers, some of whom are in this room, like Andy Behar, Tom Van Dyke, John Powers, David Fenton, and they started talking about divestment as a tool in the climate fight. And they started talking about how it might be used successfully on student campuses to start. And so in 2011, the first coal divestment campaigns were launched on college campuses. And by the end of the year, from about 6 or 7 campaigns, there were over 100. And then Bill McKibben of 350.org entered the scene, and he published the now iconic article in Rolling Stone called Global Warming's Terrifying New Math. And in that article, he really shared with the world Carbon Tracker's seminal analysis on the carbon budget. And you guys are all familiar, this notion that 4/5 of all coal, oil, and gas reserves have got to stay in the ground if we're going to maintain a habitable planet. So essentially, that do the math tour that Bill McKibben then took on the road catalyzed a whole host of actions, not only on student campuses, but among faith groups, cities, pension funds, and ultimately with foundations. And so I'm here representing the foundation arm of this broader movement, which, like I mentioned, spans all sectors, now totaling 500 institutions globally with $3.4 trillion in assets under management. And just to give you a sense of where we started, with our first press conference in 2014, where we announced the Rockefeller Brothers Fund was divesting, which of course had such a beautiful poetic symbolism, given it was the family that had founded and launched Standard Oil, which became Exxon, which is now the leading, villain in the climate saga. They decided that it was time to move on, and Stephen Hines, the executive director, said, "Listen, if John D. Rockefeller were alive today, he would, as a prudent businessman, make the same decision that we're making today. He would divest and invest because he sees the writing on the wall." So today, like I mentioned, $3.4 trillion in assets under management. And just to give you a sense, you asked me about statistics and comparing and giving people a sense of what that means. If you take the capitalization of the top 10 fossil fuel companies around the world, publicly traded companies, they hold assets under management of about $1.8 trillion. So our movement now counts assets under management twice that of the top 10 biggest oil and gas companies. So that gives you a sense of the momentum and the scale of this very powerful movement.
And it's interesting you bring up the carbon budget, because the Paris Agreement doesn't say anything, quote unquote, about a carbon budget. It left it open-ended for the indices for countries to contribute whatever their contribution was going to be to carbon emissions. But they don't talk about or say anything in that document about the bookends to that, because depends on what statistics you look at or what studies you look at, but if it's 1,200 gigatons that we have left, which translates into 2/3 or 80% of keeping it in the ground, but then how do you invest that? How do you invest that carbon budget? How much goes into shifting over the transportation sector? How much goes into the built environment? How much goes into developing renewables so that renewables are making renewables and renewables are making Teslas, and et cetera? That math hasn't really been drilled down into the level that I think that we have to go in order to really know where we're going to be in 10 years, in 2020 or 2035. So the carbon budget is really key, I think, in this whole divest movement, or divest invest movement. Now, there's two figures here that are really interesting. You say that you're 3.4 trillion that have been moved, and in the Commission on the New Climate Economy, which former President of Mexico, Calderon, Felipe Calderon, his report, it's going to take $17 trillion to move the world into 100% renewables. There's another figure out there that it's going to take 13.1 trillion for the indices as they are now in the Paris Agreement to actually be effectuated on the ground. So that gives you some, you know, a differential there of how much is needed to really move the planet to 100% renewables. So Vanessa, you've had a very interesting history in this movement. Why don't you tell us what you've been doing?
Sure. So yeah, just to build on what Clara was talking about, in 2014, with the great success of the foundation side, the philanthropy side of Divest Invest, becoming engaged and making commitments, it was sort of dawned on some of the leaders involved. My colleague Lisa Renstrom, who's here, was a co-founder of that campaign with Ellen, that it's individuals who make up the boards and the trustees and et cetera of these institutions, and that fundamentally individuals are the building blocks of social change. And so the more that we are, talking to people at the individual level, we can talk about their individual investments, and we can talk about their roles of influence and power within institutions, right? So we, in 2014, started the individual campaign within Divest Invest to engage investors of all stripes, from the accredited level, the higher net worth, to the retail and retirement investors. So we now have about 50,000 and counting individual investors who have committed to move their money where they have it connected to fossil fuel investments. And that's about 5.2 billion within that 3.4 trillion number. So, not insignificant. The individuals really do have a lot to contribute here. There's a lot more people to engage, including probably a lot of you in the room.
No, actually, that's a great point. Who among the audience has actually taken the Divest Invest pledge? Okay, maybe a tenth. Okay, well, there's a booth that we're womaning outside where you can sign up directly to take the pledge, and there really are no upfront costs. It's first of all a principal pledge to divest your portfolio over 5 years and invest a portion of your portfolio, about 5%, in renewable energy or other climate solutions. And so there's, just to be clear, there's no divestment police that are going to come hunting you down if you fail to take the pledge. But it really, this movement is all about numbers, and it's all about people standing up. And what's so beautiful about it is that it's so democratic. All of us have something to divest, whether we're part of a university that we graduated from that we can pressure to divest, or we're an individual that has a 401k or other kind of pension fund. We can work with our employers to give us a fossil-free option. So truly, the fact is you can move beyond light bulb changing, you can move beyond even retrofitting your home and actually go to the belly of the beast and start moving the money.
What are some of the myths around divestment in relationship to, okay, you divest, and then how much money is on the side now that's just sitting there because people are not quite sure where to go? We heard about Etho Capital. That would be one place to go. They've got basically an internal rating system of companies. The ESGs, my personal opinion is, are
weak tea.
That doesn't count for me, or for a lot of people, because they don't dive deep enough into sustainability principles in actually rating the companies. So how much money do you know? How much money do you know is sitting on the side? And then, if I was to divest, if I was somebody who hadn't done that, and I was going to divest, would I come to you or to you and say, now what do I do? I've got $7 million in an account, and I'm not in fossil fuels, but now what do I do? Do you provide that kind of guidance?
So my answer, Claire and I may have different answers, but it might be the same. My answer is that no, I don't provide that kind of guidance at the level of investment advising. We are not investment advisors. We are campaign advocates, right? So we would connect you with a range of potential options for advising, or we would give you resources that you could then take to your trusted advisor. That's actually one of the key points of this whole movement. That's been really neat to understand for myself in any case, that your assets, if you're not managing them directly, then you have a manager or an advisor who's doing that for you. And there's been different conversations about fiduciary duty at this stage. I think everybody's familiar with that. But it's really, the call of action here is also on these middlemen, right? These middle people, to really make sure that they're staying aware of the latest news, the trends, all of that, and that they don't let them get away with, no, you can't do this, and have the conversation end there.
And one of the offshoots of this movement is the proliferation of new investment vehicles that, fulfills the demand of investors like you and me who want other options beyond the conventional. So many of us, you talked about the myths about divestment, and one of the greatest myths that we've had to overcome and we're still struggling with is that you have to make a choice between your investments and your values, that somehow there's a divide and that you're going to be outperformed by the market if you divest, that your financial performance will suffer. Well, guess what? We now have about 5 years of experience that shows it's exactly the contrary, that divest invest institutions are outperforming the market, and there are a number of empirical studies ranging from MSCI to the Bloomberg New Energy Finance and a range of others that show that year on year, these divest invest portfolios are outperforming their conventional sisters and brothers. And the one industry-funded sort of analysis that showed that divestment was financially risky was done by the Independent Petroleum Association of America, which I love the independent there. It's just perfect. And they found that a divested portfolio actually suffered financially, but guess what? They went back 50 years and compared performance over 50 years. Guess what? That was the heyday of the oil and gas industry. We're in a very different time now. We're in a very different time now. We're looking at the death of an industry and the birth of a whole new one. And this is where the new fortunes are going to be made in the clean energy future. So, coal has been our biggest advocate right now. It has gone down the tubes, and investors in coal have suffered mightily. Oil and gas is a bit more complicated. When we talk to investors about divesting from oil and gas, they say, look, this is a cyclical market. There's going to be an upswing. We don't want to lose our shirts. We want to take advantage of that upswing. But guys, that's a morally indefensible position. Are you going to save a few pennies just to support an industry that's destroying the earth? Or are you going to be bold and invest in the truly growth sectors of the future, which may not be the most wealthy today, but you better believe that there's going to be 100 more Teslas, 100 more solar cities, 100 more other brave and bold companies that are going to change the face of we know it and are going to be the Standard Oils of the future in terms of capital accumulation and benefits to investors.
But climate risk analysis also now is one of the things that came out of Paris in the forums that I participated in was climate risk analysis. Climate risk analysis everywhere from insurance companies to health companies to, you name it. And there was a study, and maybe one of you can remember the name of it, but it just came out like, I'm going to say 5 months ago, and it was saying that if you construct a portfolio now with fossil fuels included, that your climate risk, and they have a rating, your climate risk goes way up. And so I think that we're going to see sort of a trajectory like this. The climate risk is really high. You don't want to invest in that. And these other companies are coming forward that really are climate friendly, climate efficient, as Ethos said. What about values-based? Divesting is a values-based activity. What about investing? Now, investing, it's more than the divest piece, I think, from the value standpoint, your own personal values, because you don't want fossil fuels and you know what they're doing. But on the other side of that, the invest, if you really drill down into sustainability, you get into a whole series of personal values all the way to labor and gender equity and a variety of issues. So is there something out there that is a values-based fintech, if you will, where I could go online and answer 100 questions that would drill me down, and then I could take it to a wealth advisor and I can say, okay, I've divested, here are my values, find the investment?
I just wanted to point out that one of the crucial innovations of our movement is that we're not just about divesting from the old, we're about divesting from the old but investing in the new. So you're absolutely right to focus and drill down on the invest piece, because that's what this is. It's the modeling of the whole life cycle of change we need to see. And it's why Christiana Figueres, who is the head of the Paris Climate Talks in December, said that Divest Invest was one of the key factors beyond a successful resolution of the Paris Climate Treaty. And I think, number one, it's because we are talking about the transition, and we have also socialized the notion of this carbon budget and stranded assets, which is now being talked about by people like Mark Carney at the Bank of England, and really starting to infiltrate financial regulators' consciences and the financial markets. And we know that those are the places where ultimately, you know, the world runs from. So, but in terms of a values matrix, that's really interesting. We talk about investing in climate solutions, broadly defined, and we don't want to be prescriptive with our foundations or our individuals, because we all do have different values. Some of us might want to focus on sustainable agriculture because that's very important to us. Others of us might think that renewable energy and making sure that, you know, offshore wind farms get a leg up is very key.
But there's levels of sustainable farming as well.
Sure.
So if you drill down into your value base, you know, superficial sustainable farming that might not use a no-till, or, you know, there's a variety of things, might not satisfy me.
Right.
You know, I want to go deeper than that. If we're really going to be sustainable, let's really be sustainable in our investments.
Yeah, I think, go ahead.
So, well, I was just going to ask from the individual Divest Invest, a lot of young people involved in this. Okay, so where are they going from the values-based investment? Are they drilling down as deep as I'm talking about, or are they?
I think what I've learned on this campaign is that, you know, there's just a role for every kind of person and investor. And so someone like you, you know, if the world was full of people like you, we wouldn't even have to have this conversation, right? And so the younger folks coming, I think, into the movement, and some of them, I'm right there, some of them are the founders and have been here and are you know, who I take my lead from. But, you know, a lot of them don't have any investments in the market yet, so they're getting really educated about what they want to do with their money when they do it. You know, the millennials have become, this word has become really important in business settings because millennials have particular values-based, you know, motivations for taking jobs and choosing their 401ks, et cetera. And it's a really big appeal. You know, if I'm a business leader, I want to make sure that I'm responding to those values because they make up the largest part of the workforce now, right? Other millennials are actually, you know, have inherited wealth and can do different kinds of things with their money at this stage. So I guess that's what I would say about that. And just to back up a step, I think the movement, it may really shocking to me is how much traction this movement has gotten and how much work has already been done, you know, over the last 2 years, over the last 10 years, and where people can plug in and how we can be like a mouthpiece for all of this work going on. And so I think we're at the stage where what you talked about, is there like an online mechanism where I can plug in my criteria and take it? I think we're almost there, and if it might be here, maybe somebody knows about it. But, you know, one tool that I heard get talked about earlier in the conference today is fossil-free funds, which, as you so created, which is just a really great tool to find mutual funds and ETFs that are fossil fuel free, that are carbon underground 200 free, et cetera. And you can go beyond just the, you know, the relationship to fossil fuels in your portfolio to other kinds of sustainability measures that will get into the drilled down level. And just, you know, just to point out the rapid growth, you know, I think just 2 years ago, there were less than 5 fossil-free options in terms of mutual funds and ETFs, and now there were 10. There were 10, thanks, Andy. And now there's over 20, right, in just a couple of years. 21, right. So, and it's just an important point to, you know, as you're moving your money, because I know you all are if you need to still, you know, don't be greenwashed, because there are this fossil-free label when you get into the markets can be misused, unfortunately, or can be even unintentionally misleading, where, for example, State Street Bank put out ETF that is called fossil free, but it's actually carbon underground 200 free. So an important distinction for a lot of people, particularly you, right? So just be aware of the definitions. They're not totally standardized. It's sort of like the organic label when it came out. So it is sort of about doing your homework and the due diligence and taking more control over your investments and feeling the power in that.
How do you think this movement has, to date, really dented the fossil fuel industry? Has really shifted things?
Big time.
I'd like to hear from each of you on that.
Absolutely. That was actually a myth that I wanted to talk about. One of the biggest myths is that divestment can't possibly make a difference to the bottom lines of the fossil fuel companies. Well, I would just note one exhibit, which was Peabody Coal's security filings back in 2015, where they noted divestment was a material threat to their business. Since then, they've gone out of business. As have a number of other American coal producers and a whole bunch of wildcat oil companies and gas companies. So that's a really important point to note. Yes, there were economic forces at play. There was the Clean Power Plan. There were other, but this movement in really pointing out the sort of social bad actorship of this industry was really powerful in accelerating that change. And another point that people make is, well, gosh, if I sell my investment in Exxon, some other investor will just buy it up, snap it up, and it won't actually make any difference. That may be true if you're looking at the margins at individuals, but when you're talking about giant sovereign wealth funds like Norway's, the biggest in the world, divesting from fossil fuels, you better believe it's going to make an impact on the cost of borrowing for those companies. It's going to make it that much harder for them to raise capital for further projects, exploration, and the like. That's the other part of the insanity is we can't burn 4/5 of what's in the ground, yet we're spending close to $1 trillion annually in looking for new reserves beyond those we can't burn. Thankfully, because of the oil downturn, that investment has gone down. And then finally, the most important thing, which I mentioned before, that the divestment movement has done is socialize this carbon budget stranded assets concept, which is changing policymakers' minds, which is, you mentioned the Paris Agreement didn't talk about divestment or stranded assets, but it did embody by 2050 net zero carbon emissions framework, which implicitly recognizes and incorporates the stranded assets analysis.
I like more detail.
Right, you like more detail. But the point is that this movement has changed the way financial regulators are talking about this, and so that will absolutely bring, if they want to, they can bring the fossil industry to its knees. It's change or die for them right now, and I personally would love for them to change. I would love for Exxon to be a renewable energy company. I just don't see it happening.
Okay.
Yep, and I'll just briefly say,
Thank you.
We're changing the market, and that impacts them, and we're seeing these concrete measures of that, and I think we're going to continue to see a lot more rapidly. And just to name, so we have more and better fund options. There's more green bonds, community loan funds. The World Bank is limiting lending to fossil fuel power generators. UBS Bank now offers a fossil-free portfolio. It's up and running. We've had conversations with Deutsche Bank, Amalgamated Bank, other banks. The carbon accounting, as you were talking about, the analysis is out there. There are shareholder resolutions calling on corporations to account for their carbon emissions and their reserves, and that, once that gets on the books, we've sort of won big time.
Right. Well, carbon accounting production, I think really is the next step. It has to happen because then that leads into consumerism and carbon pricing and all the rest of it. So it's a domino effect.
Yep.
I think we have 2 minutes left. So questions? Quickly? Yes.
So, about 5 minutes ago, Tesla announced they're buying Solar City.
Who did?
Tesla announced about 5 minutes ago
Nice.
that they're buying Solar City for $2.6 billion. So I'm just curious, what do you think about consolidation? And as old-style companies start to invest into clean and renewable companies, where does that fit into the mix?
This is a really important question, and it goes to the heart of some of the debates we're having as a movement right now, especially among the university sort of social justice-oriented faction of the movement. They don't want to see a recreation of the power structures of the past. I, for example, will probably get slammed for saying I would like ExxonMobil to be a renewable energy company, because in fact, they would rather see a disaggregated, distributed set of companies that breaks down the monopoly power of the past. And so, arguably the buying up of one clean tech giant Tesla of Solar City you know, but look, Solar City has been foundering a little bit, and maybe Elon can give them the mojo they need to, you know, keep winning after the fallout in states like Nevada, where they rolled back the renewable energy standards, which, you know, made it really hard for them to do business. But, you know, from a personal perspective, I just want us to get to 100% renewable, and whether it's giant companies or smaller companies, at this point, I don't think we have the luxury of time to care.
One more, go ahead.
I was just going to add, I mean, I think that's why it's so key that individuals are part of this movement, because when you get into individuals and their, you know, their individual and their collective ability to influence this conversation, like that's where you get the community accountability for, you know, how the merging of huge companies impacts, you know, accessibility to equitable, safe energy at the community level. Yeah.
It's, well, and it's indirectly, possibly directly going to influence policy as well. One other question?
Yeah, Sally, you were asking everyone to sort of a show of hands of who has divested in this room, and I raised my hand. We look alike. And I just want to invite, like, if everyone at AREDAY, everyone here is a believer, everyone here gets it, everyone should add their name to the signatories of people who have pledged, because it's just amazing, like, what it does. It changes in you when you can say to others, like, I have nothing in my investment portfolio, in my 401k, or I'm working on my school or my employer to get it. So, I don't know. I just invite everyone at the conclusion of this to get out your phones, go to idivestinvest.com .org, or wedivestinvest.org, and pledge yourself.
Here, here.
Yes. And also, as was mentioned, there is a desk out here where you can sign up, and I really encourage each of you to do it now, so you don't forget and you don't do it.
And I'll just end with, we actually have a press release all drafted to celebrate the, you know, high bar leadership of AREDAY,
and
you know, from carbon neutrality to zero waste, and we're hoping to be able to say something like 100% pledges from the community here. So help us out.
Yes.
And I'll just close quickly with a Mark Twain quote, which I think is really apt for this moment in history. Let me see if I can remember it. First they ignore you, then they laugh at you, then they fight you, and then you win. I think we're about to hit that point.